What is the main driving force in the real estate market right now? It begins and ends with how the Federal Reserve sets interest rates. But what market indicators do we need to look at to know what the Federal Reserve may do moving forward? It's not as complicated as many may think it is. And in this video, we're discussing the three main factors that the Federal Reserve uses to determine interest rate policy, along with how this policy affects home buyers and sellers in Tucson, Arizona, as well as the rest of the country. Hey everyone, it's Kimberly, your go-to real estate agent in Tucson, Arizona, and today we're talking about one of the major driving forces in the real estate market. But first, don't forget to hit the like and subscribe buttons to follow along with Tucson news and learn more about things to do and see and know about this city, my hometown. And when you're ready to buy or sell a Tucson home, all my contact information is in the description below each video on this channel. We have over 600 videos out about Tucson and real estate on this channel, so explore the rest after this one. Comment below with your market predictions. I am always curious what others think is going to happen in the future. So you're trying to decide if you want to buy or sell a home in Tucson, Arizona. Yes, you may have your individual reasons, such as relocation for work or school or family or downsizing. There are a ton of reasons that you might want to buy or sell a home, but there may be external issues out of your control that affect or delay your decision. If you're a cash buyer, you are in a good seat to be able to buy in this environment without having to worry about the insane bidding wars from just a few years ago and not having to worry about the higher interest rates of today. According to the most recent data by Redfin, 34.1% of home buyers in this market as of September are paying cash for their homes, meaning that the other approximately 2/3 of buyers are basing their home affordability on the higher current mortgage rates. Home affordability is decreasing buyer demand when it comes to Tucson, Arizona specifically, as I am sure it is doing across the rest of the country. The most recent mortgage interest rates have bounced back into the 8% range, and this is a big deterrent for many home buyers. The good news is that you can still buy down your interest rate if you have the cash on hand. You may also be able to get a much lower interest rate if you use a preferred lender when you buy a new construction home. This is why so many of my clients are buying new construction homes right now if they need to finance their home purchase. Give me a call and I can work with you to find the best fit home solution for you, whether it's new construction or existing construction in the Tucson area. Recently, the chair of the Federal Reserve, Jerome Powell, stated that they would not be cutting interest rates for at least 6 months. But why? There are three major factors that influence how the federal funds interest rate is set. Number one, of course, is inflation, which is basically the number telling us how much more things cost versus last year. Most recently, on a 12-month basis, inflation fell from 3.4 to 3.1%, meaning we're getting closer to the target yearly rate of 2%. In order to get down to 2% inflation, spending must slow down, and nothing will slow down spending like higher interest rates. The fact that inflation is falling is definitely an indicator that rates may eventually fall in the future, but we are still not quite there yet. Another major factor that determines what will happen with interest rates is gross domestic product, or GDP. GDP is essentially the sum of all of the country's goods and services produced in a given period of time. A normal GDP growth is widely considered to be around 2 to 3% per year for a developed country like the US. For 2023, the United States hit right in the middle at 2.5% GDP growth. This is not a signal to the Federal Reserve that they need to lower interest rates. If economic growth was stagnant, say lower than 2%, it would be more likely that we would see more arguments for lowering the interest rates at this time. But a GDP of 2.5% is healthy as far as economic growth goes, so it's safe to say that the GDP is not the current concern for the Federal Reserve at this time. We've discussed inflation and GDP, but what may be the largest factor that we really don't hear that much about? Well, the third major factor affecting interest rates is actually unemployment. Believe it or not, our unemployment rate is the lowest we have seen in about 53 years at 3.4%. This means that the labor force is strong, at least when it comes to finding a job, if you want one. Typically, when the unemployment rate is low like it is now, employers have to pay workers more money to attract good employees. And think about it. Seems like everyone these days days is short on help. This situation is not always the best for service if you're a customer, but it is good for wage growth. To attract employees, companies must raise wages to fill vacant positions. But when people are getting paid more, that means that prices go up because businesses can't afford to pay employees more without raising their prices. That means inflation gets pushed up because goods and services cost more. And when people are getting paid more, they spend more money in the economy, which further drives inflation as well. So quite possibly the largest indirect reason that is keeping inflation high is that there have been significant wage increases to attract better employees or for businesses even to get staffed. Wage inflation causes real inflation, and this is something we are really going to have to watch since we have seen inflation exert itself on equities and the real estate market. But it's anyone's guess on how long wage growth will keep general inflation above the targeted number. One thing for sure is that eventually the labor market will soften and we will see the economic levers shift. But at this point, 8% mortgage rates are scaring a lot of people away or making homes less affordable for many buyers. There are ways to increase affordability when buying a home, and often lenders have programs or creative financing that may work for you. So don't count yourself out. Give me a call and we can discuss your options if you're thinking about buying or selling a home in beautiful Tucson, Arizona. I hope you've learned a little bit about what is going on in the real estate market nationally and here in my hometown of Tucson, Arizona. If you're interested in buying or selling a home in Southern Arizona, I would love to help you out. All my contact information is in the description below each video on this channel, and there are over 600 videos on this channel about things to do and see and know about this city, so make sure you're exploring the rest after this one. Comment below with your thoughts on mortgage rates, and please consider showing the channel some love by liking and subscribing on your way out the door. I really appreciate you hanging out with me today, and I will see you in the next Tucson video.